Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, I'm back here on YouTube. It's been a couple of weeks. I've been away on holiday for one of those. It's been the Easter holiday, obviously. I've had the kids off school for 2 weeks. They go back on Tuesday. And we've had a lovely time away on holiday in the sun, and it has been beautifully sunny. And we come back to South Devon and it's chucking it down with rain. And just in time for me to catch a cold as well, so a little under weather at the moment. But doing the best I can, and I think we're going to start with gold and silver today, since gold's just going absolutely nuts. Now, if you're new to the channel, for whatever reason you don't know my previous stance on gold, just to lay my cards on the table and be absolutely clear, as anyone who's known me for many years will tell you, I am a gold bug, owner of gold, physical and paper, and I'm a massive proponent of doing so. It's for one of those reasons. It's just been a hated asset by a lot of people for a long time, but I've always believed in it. And it's paying off. It's paying off very nicely indeed, if I do say so myself. But even as a die-hard gold bull, even I'm starting to get a little apprehensive about just how nuts things are going. Because we're through 3,300 and climbing still to this day, which is pretty phenomenal. And the chart on the weekly time frame is basically going vertical. It's like Maverick and Goose on their way up to meet Iceman and Slater, and it's just absolutely nuts. Top Gun 1, that is, by the way. But either way, it's pretty mad. So, how mad? Let's have a quick look at some indicators to just give you an idea. So if we look at the MACD here, I'll just move his little line up to keep up with the recent increase. This is the greatest level of weekly momentum, bullish momentum, in the history of the gold market. Okay, so it's phenomenal. And the histogram confirms here these are the highest readings we've ever had on the weekly time frame. So yeah, it's pretty wild. The RSI is showing some bearish divergence between the highs in the RSI, although these are extremely overbought conditions. But these are not confirmed divergences until there is a weekly pivot in place, and there isn't one yet. It's just divergence between current highs and previous price. Now, if we look at the monthly time frame, this helps give you some even greater perspective of the long-term extreme bullish momentum on the monthly time frame, going all the way back to the late 1800s, early 20th century. This is the greatest amount of momentum, bullish momentum, has ever been in the bull market, just to reiterate, in gold. And we can see also there is no monthly divergence between highs at all, just massively overbought conditions. Conditions so overbought we haven't seen their like since 1980, so 45 years ago, which is a long time ago, really. So yeah, that's just how nuts gold is going, and it's nice to see. It honestly is nice to see the gold bugs get their day in the sun, because they've been very patient. The daily time frame. Let's have a quick look at the same indicators. Same story on the MACD. Absolutely obscene momentum. Divergence building up on the daily time frame. So high, lower high, and a subsequent lower high, double divergence here. Once again, no pivot in place on the day chart yet to confirm a high. If there was one today, or by the end of the week, we could talk about there being a top in place with a signal here from the RSI. But there is no divergence in the MACD to confirm such a signal. So it would pretty much be, you know, a 50-50, a bit of a coin toss as to whether or not this would disappear in time. If the damage was sufficient on the chart, maybe a massive daily engulfing, bearish engulfing candle on the close with a weekly high, a weekly long wick to the upside, with a push from volume and confirmation of that bearish divergence, that could be a pretty clear pivot at the highs there, but we haven't got it yet. So there you go, that's how extreme things are getting. You know, all moving averages, all pointing up on all time frames, above everything, and extending higher as we go. So it just looks super mega uber bullish. And of course, all markets top when they look super mega uber bullish. It doesn't mean they top today, it doesn't mean they top a week or a month from now, but they likely top sooner than later. So even though I am a die-hard gold bull and gold bug, and I've been loving this time, I am starting to get a little nervous. So let's now come down to the daily time frame and introduce the counts, shall we? So we're going to turn off the moving averages here, and we're just going to bring up the primary first. So, working off of all the way back from the lows of 2016, this was the bottom of Supercycle Wave 2, Supercycle Wave 1 having peaked post GFC in the year 2011. We had our Wave 1 into our Wave 2, our Wave 3 into our Wave 4, and everything since the lows of November 22 has been an extended fifth. Extended fifths are relatively common in commodities markets, gold being classed as a commodity, and this has been a rocket ship. And this is 5 waves, 1, 2, 3, 4, extended fifth into cycle wave 1. When this tops, a huge correction will occur. My bet would be down to and perhaps below $2,000, giving up a significant portion of the gold market. Whether that's going to happen sooner or later, we'll have to wait and see, but that is essentially the primary count. Now, let's come down to the smaller time frame, and we'll shift into log, where we get this beautiful piece of geometry here, which is the intermediate wave degree original pitchfork, pointing up from the lows of November 22. 1 into 2, 3 into 4, and now in another extended fifth, most likely, within a broader fifth at a larger wave degree. So I know there's a lot on the chart, so what we'll do is we'll bring that up, but we'll drop down again to 4 hours, and we'll move forward again in time from the wave 1 into the wave 2, 1, 2, 3, 4 at minor degree, into 5 at intermediate degree, and then we'll come off of the low, we'll zoom in even closer, and we'll come off the invalidation point for the low of the wave 4 at intermediate degree. This is November 2024. From here we have a wave 1 into a flat pattern, wave 2. We have 5 waves up at minute degree, into a sharp correction alternating from minor wave 4, 3 into 4, back through the median line. I think that's probably the 23.6 right here. That looks about right. And then we move up in 5 again in a smaller time frame. 1 and 2, 3 and 4, 1 and 2, 3 and 4, and now in the 5th, heading right to the top of the pitchfork. I don't know exactly when it's going to finish. It could blow off in the 5th of the 5th and really explode higher with a huge wick to the upside. If this count is correct, we are close to topping. I don't know how close, days, weeks, maybe a month, but we're close. Okay, so once this peaks, we're going to have a stupendous sell-off. Now, it won't happen overnight. This will be a cycle wave correction. It will take months, if not years, to correct all of this action. And we will likely work our way back through all of this prior structure for which there is very little support until we come back to around 2000 region. So it seems quite bearish, this primary count, but rest assured there isn't much to separate this primary from the alternate we're going to look at, which is way more bullish and continues this bull market. It depends what time frame you want to consider it, obviously. Long term, if we'd been caught up in the grand super cycle correction, which took decades and decades, it would have felt very bearish. If you were caught up in the super cycle wave correction from 2010 to 2016, that would have felt very bearish. This one will feel very bearish in your ear, but rest assured, long term, we just keep going up. And for as long as monetary debasement is a theme of modern monetary policy, and the debasement of currency is a given, and I don't see any reason why it won't be, since God bless Doge for all of their efforts, there is absolutely no way, in my opinion, out of the debt system and the debt spiral we've got ourselves into. The only way out of it is to debase the currency and to inflate the debt away systematically over time. The deflationists who think it's all going to come down in a crash are just being unrealistic, because I mean, I won't say it's impossible. I'm going off into macro now, I probably shouldn't, but the way I look at it is the system is backstopped across the board, right? So if you're worried about the sell-off in equities at the moment, you probably shouldn't be. Longer term, it's a buying opportunity. We've seen many times that the markets are backstopped, and every time something fails, it gets bailed out. You know, the most recent example we saw really was Silicon Valley Bank, and very quietly, very calmly, without any fanfare or public acknowledgement, it was bailed out, and the problems were contained, and business as usual continued. So regardless of your fears about inflation, regardless of your fears about liquidity, regardless of your fears about rates. The long-term debasement of currency will drive asset prices and gold with it higher over the longer term, but there will be cycles within it where we'll have significant periods of correction. Now this is all just my theory, I guess you could say, like this is all theoretical, but I think there's evidence to suggest that another larger correction will be on the horizon relatively soon. Now that we've spoken about that, let's look at the alternate. So the alternate idea is that the pivot, let's zoom out so you can get a clearer idea. The pivot here in August 20 down to November 22 was not a wave 4. Let's just a quick reminder of the primary. This was 1 into 2, this was 3 into 4. What this actually was another wave 1. 1 and 2, 3 and 4, 5 into a primary wave 1 into a 2. And the reason we've exploded up and away and out of this pitchfork is because this is a wave 3. Okay, so it's super powerful, super strong. And more typical of equities market behaviour than commodity market behaviour, but besides the point. 1, 2, we come up in a 3, we go back in a 4, and then we continue in a 5, into a 3, back in a 4, continue in a 5, and we don't have any big sell-off again. We've done our smaller wave degree 1, we will not get another one. And this will continue higher. Now there will be prolonged periods of sideways action, multi-month, maybe even multi-year, but the big sell-offs down to below 2 and below 2000 are a thing of the past, and we will not see them again. So that is a more bullish count. It will still have corrections within it. So if we come into the smaller time frame to the count we were looking at from a low of 22, we go up in 1 and 2 at intermediate degree. We are still within intermediate 3. We are still within the 5th of the 5th, but instead of the 5th of the 5th of the 5th of a 1, we're in the 5th of the 5th of a 3. So we'll be looking at a 4, maybe back to the median line, maybe back to the 38.2. We will then get a 5th at primary degree, which will bring us back probably into the median line, and then we will get a 5th at primary degree. 5th at intermediate into 3 at primary, 4, 5, and this will bring us into cycle 3, and then sideways in cycle 4, and then cycle 5. And you know, we're talking decades into the future, up and sideways, up and sideways, up and sideways, with the big 3 of the 3 having just played out. That's what we can see on the chart. This mega momentum, this crazy explosive move high. This was the 3 of the 3, and now we've done our overlaps at the start, and now we're going to do all of our overlaps at the top as we climb our way higher. Choppy market for the next few years or decade or so, but still upwards, still onwards and higher, right? So that's the alternate count. Primary again, this is all the wave 1, and we will get yet another wave 1 into wave 2. So we had our super cycle correction finish down here. We will go into 1 and we will come back into 2. And if we were to take the Fibonacci retracement for expected wave 2, which is a golden zone, 61.8, this is $1923. If we look at where that goes and look to our left and we look at long-term support, right, long-term support, which is the prior all-time high of the wave 1 of a larger degree, it overlaps perfectly the golden zone at 61.8. So we could get another, this is 1-2 at super cycle, this would be 1-2 at cycle, and then would be 3 in cycle of super cycle, of grand super cycle, and this would see a huge correction back to below $2,000, maybe even deeper. All right, and if that happens, guys, it will be hated again. Everyone will say it's dead, it's done, it has no use anymore, gold is silly, la la la. But that will be the opportunity of a lifetime in this space. And you've already been spoilt for several opportunities, but you'll be spoilt for a mega one here if this happens. So don't miss the boat again. Ignore all of the anti-gold arguments, all of the poo-poo arguments, and just be ready if this happens. It's going to take months, if not a year or two, when it comes. But just if you see gold back down at $2,000, don't ask questions, you buy it. This is not financial or trading advice. This is just what I'm going to do if it happens. Okay, so that's essentially, if we do top out now, that's where we come back to. If we don't top out, it's sideways up, sideways up, sideways up for years. So it's just going to be a whole bunch of chop and a whole bunch of trading opportunities. Traders like us, traders like me is going to love it, right? Because this is exactly what we want. Swinging to higher highs and high lows within an ever-expanding range. Right, within a broadening range of high wave degrees. This is just buy each low as it comes, buy each low as it comes, buy each low as it comes, right? As opposed to this massive drawdown which may occur, which would be a huge opportunity in itself, but it's not a consistent trading range like this will be. So there you go. That is gold, right? Primary, we could be approaching the top any day, any week, any month now, but sooner rather than later. If we're going to respect this pivot, this pitchfork, and these extension targets for a wave 5, we could be topping out anytime soon. We are overbought enough, we are overextended enough, we're in the right circumstances to be finding a long-term macro high. No guarantees, we'll just keep track of it as we go. Alright, so that's gold. I've rambled for far too long. So let's catch it up now on silver. Silver, the hated, unloved, and probably rightfully so, brother or sister, cousin, whatever you want to call it, of gold, because it's still below its 2011 highs. Right? Gold's so far beyond them. Where was the 2011 highs in gold? It's been so long I can't remember. It's about $1,000. That 2000, right? 1900, right? That was a super cycle high of 2011. We're now trading at 3300 and above. So yeah, we've left it for dust. Whereas the silver, we're below it, and we're not insignificantly below it either. We are 39% off the highs. That's if we were a decline from the highs to where we are. If we were to rally from here to the highs, we would have to make 63% price rally just to get to the all-time high of 2011. So we're well behind in silver. So what's going on? Either silver is lagging massively, and all of the sideways movements we expect in the alternate count perhaps more likely, although one more big drawdown would be possible in the alternate count in silver, so take your pick. If we are lagging, we're still building our ones and our twos off of the low. That's what I would mean. We're lagging, so let's have a look at the daily here and bring in the long time frame count as well. The move off of the April 2020 low, March 20 low, sorry, was the first 1-2 in this sequence within this base channel. We then had an intermediate 1 and 2. We then had a minor 1 and 2. We then had a minute 1 and 2. And now we've had a minuet 1 and 2. It's come down to the 8 hour in the form of a leading diagonal. This leaving the invalidation point at 26.19. This is now already corrected into a minuet wave 2, and now we're going to get a sub minuet 1 and 2, and it's just 1s and 2s for days. Gold's gone off through 3, 4, 5, 3, 4, 5, 3, 4, 5 through the larger wave degrees. Silver's still down here, overlapping on the launch pad, waiting to get going. And if it does get going, it will absolutely, unbelievably explode. So fast and so violently, everyone who's not already exposed will be chasing. And that will just feed it. And God knows how many short squeezes will occur at the same time. So the potential for volatility here, if we were to break to the upside, is, in my opinion, I'm not saying it's anywhere near a guarantee. I'm just saying if it were to happen, it would be extremely violent. And it would be over pretty briefly, I imagine. Now that's all conjecture, but huge potential for an explosion higher here if this count is correct. And I say if because we invalidated 26.19. It's very difficult to support this extension count below 24.25. If we fall through there, we can scrub this and go with the alternate. So, excuse me, throat's a bit sore. So what is the alternate? Well, this is the 1-2 back here is the same primary degree, but all of this move up was just 5 waves into minor 1. 1, 2, 3, 4, just avoiding an overlap. 5 waves up. Right, it's not the best looking impulse, but it works. Okay, and then now we've had 3 down into an A, 3 back into a B. Now we're going to get 1, 2, 3, 4, and 5 down in a C in what I suspect will be a flat pattern. There is the possibility that it's a running flat and it's already done. Let's just bring up the like this. So we go A, B, C. I say running flat. That would be incorrect. Excuse me. We did not expand in the B wave, and we knew we need a new price extreme for the B wave. So really, I think I've mislabeled that. If I'm being honest, A and B. Have we retraced 90%? Is the question. Yes, we have. So we can label it flat. So it's not unfair to label it A, B, and 5 waves down in the C. But we'll put W, X, and Y here as well in minute. But we'll put this in orange as an alternate on the chart, so I can just be reminded when I look at it that this could be a zigzag into a zigzag into a zigzag as opposed to 5 waves. If I'd seen the B expand, which is typical of a flat for a expanded flat, which is the most common flat pattern, then a running flat or an expanded flat would be the most common. We did come back to 90% retracement, or 89 fib number as I use, so it is still potentially a flat, but it'd have to be a regular flat. So in that case, it really should extend beyond where the A wave completed down here. It really should get below 26.18, otherwise this double zigzag makes more sense, and even that's not going to have a pretty picture to it either. So the alternate account's possible, without a doubt. Running a regular flat, probably the best bet. But the primary for the meantime is still valid above 26.19, which is, this is yet again another 1 into 2. And that's it, guys, for silver. So, well, I'll finish on the bearish count. So, what if silver is not ever going to chase gold, and we are going to get that huge correction in gold into a 1 into a 2? That brings silver probably all the way back to around the COVID lows of April 2020. And the big zigzag, which will be forming in gold, likely at a wave 2 degree to come down so deeply, will actually be the 5 wave move of the flat, plus some meandering around in 1s and 2s. That will probably be this period in silver, and move all the way back to the lows around $13.50. Okay, big collapse. And then maybe finally, that's 1 into 2 at super cycle degree or cycle degree, and we can catch up with gold in the future. But we'll have to wait and see what happens with gold, won't we? But I find it hard to believe that if gold breaks down violently into a wave 2, that silver's going to go rocketing higher. But it's not impossible. It's not impossible. Silver could chase while gold sells off. I don't think I've seen it before. But if gold were to go sideways, silver could definitely chase. So we'll wait and see. In the meantime, primary count still pointing towards an explosion sometime soon. Keep your eyes on the chart. If we break these levels, 26.19, 24.25, we have to scrub this idea of 1-2, 1-2, 1-2, 1-2. It's no longer valid. And look at a larger correction down back to the edge of the base channel, probably around the golden zone, $22, $21 region, right? And then look to rally from there. If we can't rally from there and we break this base channel, this upward trend line, then it probably is the bearish count and we're going lower. Alright then, guys, thank you very much for joining me. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. If you're interested in learning Elliott Wave for yourself, consider signing up to the Patreon at tier 2 or above, and you can get access to the Elliott Wave series as well as a whole bunch of other educational material, access to public Discord where there's loads of members to talk to and channels to discuss things on, and also a new series for my tier 3s which is called Watchlist, where I share personal watchlist ideas on a weekly or bi-weekly basis going forward. If that kind of thing interests you, there's a link in the description box below. Feel free to sign up. If you're not following me on Twitter yet, feel free to do so. I occasionally remember to put uploads on there as well. But either way, guys, take care of yourselves, all the best, and I'll be back with you as soon as I can. Take care. Bye bye.